All right, so Clay, walk me through this. You're at a 141 price target for Apple and the sell rating. The rest of the street's at 228. They have a buy rating. Now, we know some price targets and things may change, but why are you so bearish? And after that, what we saw yesterday, I should say, at WWDC, are you more bearish, or did things kind of turn out the way you expected?
No, I think things turned out pretty much as expected. My co-author Craig and I have framed this as sort of a litany of risks that Apple is facing when you think about just the tariffs, the response from China, Apple's position in China from a marketplace, these App Store rulings in the Epic case and the Digital Markets Act in Europe. There's just a sort of parade of sort of not existential threats by any means, but meaningful risks to Apple's businesses, including its this incredible services business that has really supported the stock for a long time. So it's not these existential threats and being so far behind in AI, although that's clearly a risk that we care about. But weighing those risks against what is really a premium valuation, against what we think is probably going to be good but not spectacular growth. And so it's a real dichotomy between the risks and the valuations, and how those two things interplay. All right.
Clay, just 1 second. Right now, we're seeing some officials actually going into the U.S.-China trade talks right now. I couldn't quite see who it was, but we know that it's Commerce Secretary Howard Lutnick. I believe that's actually who just walked in. One of my producers is telling me. And right now, we're taking a look. Obviously, a developing situation. The camera's panning a bit. But again, Commerce Secretary Howard Lutnick just entering a building for these trade negotiations. We know Treasury Secretary Scott Bessent is there. Also, the U.S. Trade Rep Jamieson Greer. They're meeting with Chinese Vice Premier La Hafeng. They're going to be, I'm mispronouncing his name, but the Chinese Vice Premier right now. So again, moving camera right now. So Clay, I want to come back to you. I believe all those things that you just listed right there, those are the 1,000 paper cuts we were referring to, all those different issues. The court ruling, the threat to the services business and a few other things. Isn't this a big tailwind, the idea that the U.S. and China are having trade talks? And couldn't this potentially relieve some of the tariff pressure on Apple?
Well, it certainly could. I think that Apple still likely will try to sort of at least diversify its supply chain over time, which would be very costly and take a long time to do, irrespective of what actually happens in terms of a functional tariff rate. And I think Apple's market position in China is inevitably going to be impacted. It already has, from the fallout from this trade dispute, that these things get into a marketplace in terms of Huawei and Vivo and others benefiting from nationalism and sort of a local champion, spurring around a local champion. These things don't go away overnight. So I would expect that, Apple's travails in China will continue for some time. It won't be resolved in a trade, in a trade meeting and a resolution of a rate.
All right, so a lot of people came out bearish about Apple. One of the things they're citing is the valuation, something that you just cited. But if you're still a bull on the stock, you're saying there's two things that have to materialize. Number one, we need to see some developments when it comes to Apple Intelligence, and including an upgrade cycle for the iPhone fueled by it. And then you're saying Apple needs to create a subscription-based revenue stream based on Agentic AI. Now, the second one seems a bit more tricky than the upgrade cycle. Talk to me about it. What would this Agentic AI subscription be for?
Well, I think you can think of it in context of, a really advanced, powerful Siri that's available kind of in a pro tier, if you will. What we didn't hear very much yesterday was, the sort of functions of Apple's private cloud compute, right? So I think that there's going to be a real differentiation between either an on-device model, which Apple's allowing developers to access now with these SDKs and opening up the foundational models. But remember, those are the on-device 3 billion parameter model, clearly not as performant as something like a GPT-4 or something that's going to be cloud-based. And so part of the opportunity for Apple is going to be to really lean into this privacy element of it. They've constructed what we think is a clever strategy around private cloud compute that's essentially, funnels traffic into frontier models, but really kind of lays Apple's kind of end-to-end security and privacy around it. We'll see if consumers really respond to that, or if the real demand from consumers is the performance of a cloud model that's accessible from not just Apple devices, but other devices as well.